Hey everybody, we've got more scary financial news. We're going to talk about rents today. We're going to talk about the mega company, the mega corporation that's raising rents. And they're not just raising them by a little, they're raising them by a lot. Let's go ahead and get started right here. Out of BNN Bloomberg, Invitation Homes boost rents 11% as housing shortage persists. An 11% increase, and that's not even the worst of it. Take a look at this. First of all, a little bit about Invitation Homes. Invitation owns more than 80,000 single-family homes in the United States. And folks, we've talked about this before. This is one of the big reasons why home prices are going up so fast. We have these corporations out there with, at the click of a button, at the click of a mouse, they have access to billions of dollars to go out and buy these homes cash. Of course, the home seller is going to accept the cash offer. And these companies have access to nearly free money, almost free money. It's such a low interest rate. All right, but here's what they did. The company boosted rents by 8% on renewals. So that's current renters that are renewing their lease, and 18% when leasing out homes to new tenants. And here is the kicker. That was just in the third quarter, And take a look at this. Rents in the Southwest led the rise, and it was a 30% increase in Las Vegas and a 29% increase in Phoenix, Arizona. Right, and that includes all rentals, not just the ones owned by Invitation Homes, but just rents in general in those two cities went up that much. But Invitation Homes, that was their average increase was 11%, and not just in those expensive cities, but overall between the 80 something plus thousand homes that they own. And these are single family homes. Right? So this continues with this backwards economy where what should be happening, just the opposite happens. When so many people are out of the labor force, unemployed, some of them can't find work, some of them can find work, but they're choosing not to work. We should see prices correcting, but just the opposite is happening. Prices continue to surge. Companies are coming in and buying record amounts of homes. We talked about this a few times. Back in the second quarter of this year, it was 25% of all home sales were to investors. 25%. So 1 in 4 home sales across the United States to investors, right? So that's a big problem because investors, and especially these mega companies, they have deep, deep pockets. And most of the time, they're going to win the bidding war. All right, combine that with the labor shortage, the supply chain disruption, the rising price on building materials is going to cause homes to build slower, and it's going to be much more expensive. Home builders having trouble finding labor, they're going to have to pay more to attract workers. And just like we told you at the beginning of the health crisis, was that prices are going to continue to rise. The cost of living going to continue to rise until they stop printing all this money. Prices are going to continue to rise. All right, now let's go to a chart right here. This is out of apartmentlist.com, and this is interesting because it shows you the average rent price going back to 2018, and we see the trend here. And then starting around when the health crisis came out, it shows us what the trend would have been if it would have continued as it had the previous 2 years. But instead, we saw an initial decrease in rents, but then it skyrocketed above what the norm would have been or what the trend line would have been. Right? And we still have eviction moratoriums happening in some places. Now, we talked about for a while how rents may not go up so fast once the eviction moratoriums were ended. Well, the moratoriums are ended in a lot of places, not all places, and we're still seeing this rapid rise in rents. And here's a couple stories here. Washington State eviction limits set to expire Sunday. So we're going to see how that plays out in the state of Washington. All right, some other headlines here. Renters are being evicted, waiting for federal rent assistance. All right, we're seeing more housing-related crime and incidents. Bakersfield man sentenced to life term for shooting over an eviction. Right, and we've highlighted some of these stories. So things are going to continue to get more dangerous out there. The more that people are financially strapped, the more danger it's going to be. We talked about the rising rates of crime. It's definitely going up, and it looks like it's going to continue to get worse. Combine that with the a lot of the cops are leaving the force right now, a lot of police, and it's a very dangerous time. It's going to be a very difficult time financially, and I see a lot of people out there still doing needless spending, people taking vacations that they don't really need to take. And I just really don't want to see these people end up in a really, really bad spot, maybe homeless, maybe having to move in with a relative. I'm sure you're going to see a lot more people moving in with their relatives to avoid homelessness. I mean, that seems like what's going to be happening here. If these rents don't stop increasing, people are not making enough, getting enough wage increases. Even Social Security, with the biggest increase that we've seen in the Social Security payout, is not enough to keep up with this rising cost of living. When you look at all the costs associated with just staying warm, the heating costs, of course, just the cost of living, rents, food, gas coming up on $5 a gallon here now in California. It's absolutely insane. And while there's going to be continued pain and worsening pain on Main Street, especially for renters, and even more especially renters that are renting from Invitation Homes, the stock market continues to ignore the brutal reality that's happening on Main Street. Wall Street continues to rock. Dow Jones 35,819 closed in the green. It's only the Russell 2000 that closed in the red today. Crude oil $83.22 at close. Gold $17.85. Silver $23, just under $24. People are starting to get a little bit scared of making major purchases. We're seeing home sales drop, but the shortage of homes still has prices continuing to rise. We're seeing the lack of inventory for cars causing car and truck sales to crash. Prices still going up because of the shortage. Banks still loaning out money. Debt still rising for most people. What will be the straw that breaks the camel's back? People cannot go into endless debt. The banks can. The banks can loan out endless amounts of money. But at some point, the average household is not going to get enough wage increases to keep up with the rising cost of living and all of the expenses that go along with it. At some point, there's going to be something that breaks the back, and you're going to start seeing a big surge in bankruptcies. All the assistance programs are dwindling down to nothing now. We see Washington, as we just talked about, Washington's going to be ending that statewide eviction moratorium. So add that state to the list of the states that have gotten rid of it. Now, there's still going to be some local eviction moratoriums still in place. Certain cities, certain counties are still going to keep it up, but the statewide one has ended in Washington. We'll have to keep an eye on it, folks. What do you think about the Invitation Homes raising the rents and just everything, the overall rising cost of living? Are we headed into hyperinflation? Please let me know what you think. How are you preparing? Are you stacking? Are you moving out of state to a cheaper area? Please let me know down in the comments. I'll be looking forward to it. Thanks everybody for being here. Stay well, stay safe, keep stacking. Bye for now. Stay positive.